Okay, key question. How to qualify for a bigger loan or more loans? Of course, again, with the KCLau, there's a limit how much you can go. Of course, obviously, the first two things is increase your income. Every year, if you have good salary adjustments, stuff like that, that will help. That will obviously help. If you have bonuses, stuff like that, that will also help. Let the bankers know. There's also a difference between contractual bonus and variable bonus. Contractual bonus, which means, let's say 13 month or 14 months sort of thing, those can be counted in 100%. But if, let's say you have variable bonuses, that will also help. But banks will generally give a discount factor to that because the factor is variable. Okay, so and also people who, let's say, have rental, for example, let the bankers know upfront because rental can be taken into account as income. Okay.
So like the rental, is it counted
Yeah.
100%? Is it counted 100%?
No, KC. Generally, rental is not 100%. Yeah. Differs from bank to bank, but it can be ranged from 50% to 80%.
Okay.
Okay, but it still helps, no?
Yeah, it still helps.
So yeah. So of course, so there's why people who actually buy properties to keep and rent, for example, then in the long term, actually the effect of that is that they can actually see that they can actually still borrow more loans because of the fact that the rental helps them. So that's one of the plus point. The other way, of course, is to reduce your commitment. I think that's quite obvious. Like I said earlier, when you swap a card, try not to swap too many cards before you borrow a loan. Or try not to buy expensive items using a credit card before you borrow a loan. Or let's say if you have small loans, for example, if you can just redeem the full loan or settle the full loan, small loan especially, so you can free yourself up. Otherwise, these things, even small loan, will still be taken as a credit, so it will affect you. Yeah. And then, of course, people who, let's say, are in a situation of, let's say they already have 2 housing loans, now they want to buy a third one. Obviously, the third one, they only have 70% maximum margin. So what some people do, or what you can do, is that you can actually sell off your second property first. Then when you apply for a new loan, then you're still entitled to 90%. But bear in mind, there are terms and conditions apply, which means banks will also want to look at certain legal documents to determine that your sale is actually legitimate. It's just not just a booking form you do. It's not like that.
You want to look at the S&P as well?
Yeah, S&P has to be stamped.
Oh, have to be stamped, okay.
Yeah, it has to be stamped. And then some banks will also want to look at whether you have banked in your deposits as per what you said. 10% thing. But some banks don't even take that. Some banks actually will ask for a letter of discharge from bank, which means this will only come in much later down the road.
Yeah, probably 3 or 4 months down the road already.
Correct. Yeah, so it depends on banks' policies on that. Yeah, but so these are some of the ways that you can actually help to reduce your commitment upfront. Okay, the other thing is co-borrower. Co-borrower means joint borrower. You get somebody else to be your joint borrower to support your loan. For instance, if you alone is not enough to justify the loan because of your commitment and so on and so forth, then you can actually bring in a co-borrower. Okay, so that will also help you to qualify for a loan. But of course, the co-borrower has to qualify for it as well. In totality, both you and the co-borrower. Some banks will also go to the extent of looking at the relationship, stuff like that. But generally, this can be done. Okay. And the other thing is guarantor. Guarantor means this guarantor is not a co-borrower, but he's a guarantor to the person's loan. Which means, let's say the loan is only one person, but because of his high DSR, or let's say his commitment is high, then he can bring in another person to be a guarantor of his loan. So this guarantor does not affect, this guarantor will not become a borrower, but only become a guarantor. But
so like becoming becoming a guarantor, does that take up the DSR of the guarantor?
Okay, for a moment it doesn't.
Okay.
It doesn't count it as part of the secrets. Yeah. So, but of course, in future, whether bank and guarantor changes the rule or not, we don't know lah. I think for now it's still okay. Yeah.
That's right.
But just bear in mind, guarantor's relationship with the borrower is actually important here. Normally, they only allow people who are immediate families, you know, even siblings sometimes, spouse. Yeah. Okay. Then another thing which helps is people who are high net worth. We are talking about at least a minimum 1 million above, of which 1 million above, preferably if the person has more than 30% of that is cash, as a general guideline. So this will also help in terms of getting a loan approved. It may not be the full highest margin of financing, but at least that allows the person to actually get maybe 70%, something like that. So high net worth also, banks also look at the person's not just cash, but also things like EPF, investments, unit trusts, of course FDs, stuff like that, Amanah Saham, and even let's say properties without loan, that will also be counted as part of the high net worth. Okay?
Okay.
Yeah, and also there's also another instrument which you can tap into, is the extended loan. So these things like, for example, renovation loan, you can actually tap some money when you apply for a loan. Ask for an extended loan. Only apply for some banks. You can actually tap. There are also loans that actually more of a personal loan basis, which means you can just take the money. How you want to use it is up to you. If it's renovation loan, means you have to, the bank will actually release the money upon showing the invoices or receipts. So that's the difference. And then also, of course, entry costs, you can choose to finance it if you want to. When I say entry costs, we are referring to the legal fees, stamp duty, and valuation fees. So some banks actually allow you to financing that bit as well. So emphasis here, of course, at the end of the day, you need to be a good paymaster in order to qualify for all these things. Okay, then refinance is also another way of doing it. Especially, let's say if you are let's say now you have 2 housing loans, and you want to buy a new property. So your new property obviously only qualifies you for 70%. So you still need to fork out 30% cash for your down payment, right? So what you can do is you can actually, before you buy a new one, you can refinance your second housing loan first. When you refinance, it's still 2 housing loans, so you still qualify for up to 90%, subject to meeting the bank's criteria, of course. So when you refinance, you get the money. So that money can be used for your next property's down payment. And the next property, when you apply for a loan, if you are entitled to let's say 70%, then effectively you are getting full 100% down payment, full 100% financing. So this is one of the ways they can actually go around. And like I think earlier I shared with you already, the selling existing properties, how you go about it, and settling some small outstanding loans if you have. Yeah, there's no point for these things to be sitting there as an obstacle. So it's sometimes better to actually fully settle it so that you can actually get a bigger loan next time. I think this also applies to people who in the past have bought those low to medium cost housing or apartments because of the nature, 100K or so. But that also be counted as one of the housing loans. So therefore, all the 7% to 20%. So these are some examples.
At my website, you'll find online financial seminars, which is I call webinars. I do it regularly, and also a lot of online investment and financial courses, which is conducted solely online. So I'll be waiting for you at my website at KCLau.com. I wish you have a great day. Hope to see you soon. Bye bye.